Good morning, everyone. This is Brad Matheny again. Today's the 15th of August. This morning we had a huge gap in the SPY after some news. Very solid news this morning. Really, when you come over here and you take a look at it, the news this morning was related here to jobless claims coming in, showing that, moderately weaker jobless claims, core retail sales are holding up. Pricing pressures up a little bit, export price index up a little bit. Philadelphia manufacturing index is moving down. New York State manufacturing index moving down a little bit. We're retail sales a little positive, and excluding gas and autos holding up relatively well. Then you come down here and you look at this industrial production slowing down a bit, nothing serious. And then we have manufacturing production slowing down a bit, nothing serious. Business inventories are holding up okay. Housing market index is contracting a bit. We're not seeing a collapse. That's the bottom line. We're not seeing a collapse. We're looking more towards a soft landing. And as long as this data continues to perform fairly well, we're going to probably move into the melt up stage. So there's the question: where is my carryover in counter trending mode? Well, to be honest with you, sometimes the patterns are wrong. So, and I'm not saying it's going to be wrong. We still have, a good 3 hours roughly left in the day, a little over. But where is the counter trending? Well, on a big news day like today, we may end up just having a fairly strong melt up period. Now, we are moving very close to my upward target area. Okay. I had indicated we could run into some resistance right around this 552 and a half, 553 area. We're now at 552 and a half. I would say stay cautious of this rally phase up here. We're not seeing any downward trending yet, but we've come right back up to this rejection area, and we may see prices turn around. We may see prices move downward. We've got a very big gap here, moderate gap here. So we are starting to see some real, let's call it upward momentum. But at the same point in time, I know, and you should know, that the markets don't go straight up and straight down. They typically roll like we saw here. Or again, if I come back over here, they roll up and down through trends. And this big rolling upward that we're seeing right here is what I would call excessive. So we still have a chance that we could move a little bit downward, maybe down into the 550 area, maybe a bit further. This counter trend carryover trade today on the SPY cycle patterns could see the afternoon move into a bit of a downward slide. So go back here to 15-minute, and we could see this roll into a moderate downward slide today. So this is what I expected. Didn't happen. And obviously, I'm not perfect at predicting these types of moves, especially when we get big data-driven events come in. But if we were to see a rollover, I would expect it to happen up near this 552.50 and maybe coming back down to this 550 area. I mean, ideally, we could come down to this 547, but I don't think that's going to happen. So I will just warn you that this area, 550, would probably be a pretty decent rollover. Now, tomorrow, we are looking at an inside breakaway in trending mode. An inside breakaway means it opens inside of today's bar range and moves into a breakaway pattern. So that could mean a very solid rally phase for tomorrow. And like I said, I expected a counter trending move today. Didn't happen. Tomorrow's inside breakaway. Let me get this data in here. 30-minute. Try to get it to where you can see it. You can see that we come right back up to this rejection area. And it's very important for you guys to understand that an inside breakaway tomorrow, depending on what happens today, could very easily open in this 551, 552 area and rally up into this 557, 558 area. Why is this area so important? Is because we roll through these dual rejection areas here, and here. All right, close enough. This rejection area here and this rejection area here. So remember, these are Fibonacci. Everything I'm doing right now is all Fibonacci. So, and that's how I look at the chart. I've taught you guys before. I've got a number of videos up on TradingView, particularly my mechanics of trading videos. And then there's a number of other videos teaching you how to use Fibonacci price theory. But the real scenario here is these are Fibonacci price peaks. This one happens to be a unique price peak. This one happens to be a standout price peak. These are acting as resistance channels. This is acting as a resistance channel across here. This is an ultimate price peak. Now, an ultimate is also a unique and is also a standout. The only difference between them, the standout is a high price peak that has not been hit in the last 5 or 10 bars, typically, sometimes less. You can go down to 2 or 3. It's just a unique peak that sets up. There's a little one right in here. There's lots of little peaks like this one, this one, this one. Here's more. Here's a nice unique peak here, or sorry, standout peak here, standout peak right here, standout peak here and here. They happen all the time. Standout peaks are the shortest term price pivots or fractal formations. Unique peaks and troughs are lasting longer. Typically, that's going to be a peak or a trough that has not been touched in the last 15 or 20 bars. That's a unique. An ultimate price peak is going to be something where price has not been touched in the last 40 to 50 bars, hypothetically. And again, it varies. It's really based on time. So ideally, what you want to remember here is 40 to 50 30-minute bars puts us, you do the math real quick, at about 24 hours, roughly. So the idea here is if something hasn't been touched the last 24 hours, it's going to be considered a unique peak. Now, because we're only mapping out regular trading sessions, that's actually going to be more like 2.5 days. So, but again, the way it works is Fibonacci tells us everything we need to know about price and price action. We are climbing higher. We are gapping upward. We gapped and filled this. We moved up and filled this gap yesterday. Very strong trending yesterday. Gapped up again today. So we have 2 very clean gaps. One here, one right up here. With a little bit of a potential gap right down here, but I mean, I wouldn't call that a gap. And what we're looking at here, guys, little gap right here. What we're looking at here is the potential for some sort of rotation exhaustion move, moving back into tomorrow's inside breakaway. And tomorrow's inside breakaway will be more along the lines of this channel right there. So you can see this channel here moving upward. I think that's where we're going to try to find some support tomorrow. Maybe a little higher. So let me move this a little higher. Right in that area. And I think that's a pretty common outcome for what I think is going to be very likely tomorrow, showing a decent move back to the upside after our potential rotation here. So where's the counter trend carryover trade? Well, it obviously hasn't shown up yet. Let's see how it plays out. Generally, a counter trend carryover trade would be a moderate downward rotation. So again, we could look at a moderate downward rotation somewhere into this area if it shows up today. And again, if it doesn't show up, then obviously the pattern was probably incorrect today. And that happens. That's something that, again, I've told you before. You try to predict the future, give it a shot. I predicted this pattern months ago. So you go ahead and try to pick exactly what's going to happen on November, whatever, and tell me how accurate you are. And do it every day for November and tell me how accurate you are when we get through the day. So we'll see how this plays out. All of my cycle patterns, believe it or not, all of these have been predicted out for the next 10, 11, 12 years, out to 2035. And I can just keep going with them. I can carry them out to 2095 if I want. So all of these have been predicted for the last 3 or 4 years. They have been just basically sitting in a list, waiting for us to get to those days. That's why I know, hypothetically what's going to happen on 9/2. It's not that these things change because this changes. These things are predicted all the way out to 2035, and they don't change. What changes potentially is this area, the trending, the action, the biasing, and even this counter trend and trending mode doesn't change. It doesn't change. It's all based on predictive analytics. Sometimes we're right, sometimes we're wrong. Most of the time when we're wrong, it's because of some outside force, some outside news or data, large growth in the US economy. So and so is buying out somebody else, that sends the stock market higher. War starts, whatever, sends the stock markets lower. That type of outside event detracts from this. And the way I explain it to people is, hypothetically, you get up, you have a normal schedule. You go to work, you get up, take a shower, have your breakfast, get dressed, go to work. That's your normal schedule. Lunchtime, you take a lunch. By 5:30, you go home. You run a couple errands. You kiss your wife, say hi, have dinner, play with the kids, go to bed. That's your normal schedule. Nothing disrupted your normal schedule. That's what you'd be doing 80, 90% of the time, right? But now you get up in the morning, you take a shower, you get dressed, you start to have your breakfast, and all of a sudden you get a phone call. And your mom is in the hospital. Sudden something. I don't know. Now your whole day is messed. Your normal schedule is gone. You're going off to some special event that has to take place. You rush to the hospital. Your lunch schedule is messed up. You're not doing your work. You call the wife, tell her where you're at, what's going on. She's got to pick up the kids. You can't do anything. You call your boss, say you're going to be gone for 5 more days. That's kind of what happens here when data kicks in or some outside event kicks in. You abandon your normal outcome and do something different. And that's kind of what's happening right here. You can see we're getting this rollover now. Kind of interesting. Let's come over here and take a look at this. I was playing with this yesterday because I'll show you. We had such a beautiful move here. And I'm going to have to spread this out a little. But I mean, it was just gorgeous. So look at this right there. Look at this move, actually a little bit further. Look at this big, beautiful move. And what I was really looking at was using this as an example for the new tools that I've created, but particularly watching through this rotation through here. And I've kind of got the charts lined up. You can see where I'm pointing to here aligns almost perfectly with the bottom. There we go. So you can see bullish trending from this point on all the way up, bullish trending all the way up here. This is the pressure exhaustion system. Bullish trending, bullish trending, bullish trending, little blip bearish, back into bullish trending. Each one of these green blocks are reattack triggers, back into bearish trending, bullish trending, bullish trending, bullish trending, bullish trending, all the way through. Bullish trending all the way through. This is a 10-minute, this is a 5-minute. Same thing here. Short-term wave patterns, intermediate-term wave patterns, and you can see bullish trending all the way up, goes into bearish trending a little bit here, goes back into bullish trending here, goes back to bearish trending here, back into bullish trending here, a little bit of bearish trending, bullish, and then back into bearish, bullish, bearish, bullish, all the way through here, bearish up here, bullish back down here, all the way through, a little blip to bearish, and then back into bullish all the way across. The point behind this is I wanted to show you how this all worked. Very solid bullish trending all the way up, couple of little rotations right through these little bearish modes. Remember, we're in counter trend bearish territory, and that's where we're at right now. We're in counter trend bearish territory. So I come back over here, go to the right, spread everything out, come back over here, go to the right, spread everything out. We are in very strong bullish trending with our gap. We have got a new red trigger right here. Check this out. New counter trend, bearish trend set up. Got to wait till the end of the bar. We are in exhaustion mode here on this bullish trigger, and we are in very strong bullish trending here with the Bollinger Band, with the wave count, with this wave count, with this wave count. Now, what is this bearish trigger? This is counter trend bearish trigger, meaning we are still strongly bullish. We are moving into a moderate pullback potentially. We'll see how long it lasts, but you should not be aggressively trying to trade this counter trend trade. This is a moderate pullback, guys, nothing major. And the reason why this works so well is it's designed to teach you how to see the chart. You've got bullish, 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 moving into bearish, bullish, bullish, bullish. So at this point, you've got one bearish trigger telling you the shorter term charts moving into a counter trend, downtrend. And you can see as we come back over here, we've started to see a little bit of a pullback take place up near that resistance area that I suggested. So try to bring it back down, spread it out. There's our counter trend, maybe setting up, rolling, just kind of like I drew here. So we'll see how it plays out. The reason why this counter trend may be setting up right now is because we're moving into the end of New York lunchtime. The European markets are closing. We're at the European lunchtime move. This rally phase off the data could have exhausted itself. Now we could roll back down here. Okay, guys, more later. Talk to you soon.